Morning, everyone. It's 8:13, and I can get this done a little early today because the two numbers that are coming out, the JOLTS, the job offerings, and the other, I don't remember. Oh, factory orders. Neither of those are coming out until 10 a.m. So I'll get you up to date here pretty quickly. Um, Here's what I don't get: the CEO of Uber comes on and talks about how great things are and how they beat the numbers. They're losing money. The company's been around since 2009, 14 years, and we've always heard we're losing money, but we're doing better. I get it. But 9 years is an awfully long time. That's number one. Um, Number two, even though they beat with a loss. They only lost 8 cents instead of losing 9 cents. And on that news, the stock is 35.30 up 256. I'm puzzled. Um, their service, Andrew Ross Sorkin pointed out, has gotten very expensive and has limited numbers of drivers, unless, of course, you want to join Uber One for a fee to have access to more drivers. Then, of course, there's surge pricing. So if you want to go if you want to go 15 blocks in Manhattan at 10 o'clock in the morning, you're probably okay. You make the same ride at 4 o'clock or 4:30 in the afternoon, and it's double. So personally, I don't get it. Maybe it's because I live in the suburbs and, don't have to have it, but it doesn't make a lot of sense to me. It's the same old story. You know, we only lose a little, but we make up for it in volume. Hindenberg today came out with a story on Icon Enterprises. The stock is 47.30. That's down about $3. Hindenburg is a short house. They say that Icon has spread himself too thin on the number of deals that he's doing, and he's over leveraged himself on deals that currently are not working. So, and it's true. I've actually watched the stock come down and not really understood how he can be so buoyant whenever he's interviewed, as the stock is, you know, lower. I think that the recent high, and by recent, I'm looking at like the last 2 years, was about 60. So it's not really terrible. I mean, it looks terrible today, down 6%, but, um, you know, the guy's been around a long time and he's done a pretty good job. BP, a miss, and with a lowered buyback. Very disappointing to shareholders. Stock closed 40, has a low of 37.71. The last is 37.94. That's down $2.07 or 5.1%. Going the other way, HSBC with huge beat, both earnings and revenues. Stock closed 35.83. High is 38. Last is 37.89. And that one is up 206 or 5.75. Morgan Stanley, more layoffs. The stock was down yesterday, $2. Today it's up 15 cents on poor guidance. Chegg, which yesterday I mentioned last night, was 12, down 6. This morning, 9.5, with a last of 1020, down 740. So it's only gotten worse. I guess the CEO is going to be on CNBC sometime during the day today. Um, and this one was interesting. Um, HOUR. They say that they are a specialty retailer. The stock has gone from 10 and a half to $1.41, and this morning has turned sharply higher. Has been as high as 577. The last is 475, and that's up $3 and change, or just a scant 200%. But when I went to look and see what kind of specialty retailer they are anything but specialty. They sell home and garden, they sell apparel, they sell electronics. So, this is what you get when the company writes its own description. And, like war, the winners get to write the history. Um, the ex Fed president from Dallas, Richard Fisher, was on this morning. Um, and he was talking about how poorly SVB was managed. And frankly, I understand that. But here's something that nobody's really talking about. Has nobody noticed that the states with the highest tax rates are the ones where the banks are failing? California, New York, Signature in New York, the other three in the last 8 weeks in California. Both states going through a massive exodus. And I'll add one other thing that Mr. Fisher didn't mention. This is typical of the banks. When they can't make money, they increase the amount of risk that they're taking on. Take a look at the history. Everybody looks at Citicorp, and they think that it's, been such a great stock because it's gone from 40 to 50. And over a longer term, it's gone from 90 down to a low of 32, back up to 80, back down to 40. This stock was reversed 1 for 10. This stock is not doing well. You see Bank of America, you see JP Morgan, you see these other stocks, and it gets lost on the investor when they don't know the history of a company. This company is essentially a $4 stock, not a $60 stock or a $40 stock. I mean, let's call a spade, guys. DuPont with a beat, top and bottom line, but poor guidance. And it doesn't surprise me because chemicals rely a great deal on oil. And so if prices are up there and you can't pass them along, DuPont gets squeezed. The stock this morning is 66. That's down $3.38 on that guidance, so down about 5%. Okay, when I came in at 6:30 this morning and the Dow was indicated down 70, popped up to down 60, then to down 30, currently down 71. Same place it's really been all day. Nasdaq is showing down about $5. It's gone from up 8 to down 5, so really nothing there. And the S&P has basically been down 7 to down 5 to down 7 to currently down 9. So really not a lot going on. As I said, the jolts and those numbers don't come out until 10. Asia and Europe are mixed to lower. China is still closed for Labor Day. I didn't know that the laborers had any rights. In any event, that's where we are this morning. I'll be back later this afternoon. There are a whole bunch of earnings that I have not seen posted. American Express was supposed to report. I haven't seen it yet. The guy from Chgg is going to talk at 4 o'clock, so that's not going to have any, you know, influence on the stock during the day today. Um, and Pfizer with a double beat and okay guidance, $40.44. And while that's up a little, it ain't up much. It was as high as 40 and a half. Last is 39.52, up 31 cents or less than 1%. And let's remember that the turn of the year, the stock was 50, now 40. Not great. Last 2 years with COVID, up to 62, now just under 40. So, not a great return there either. All right, folks, I'll be back later on.